In this video guys, I'm gonna be teaching you guys how to trade the forex market for beginners. This is gonna be a free, in-depth and detailed course. Like as you can see from the title of this video, it's gonna be a pretty long video compared to the ones I've done in the past. My videos is actually maybe 10 minutes long. This video is gonna be at least 15 minutes long. So guys, grab a cup of coffee or a popcorn and enjoy this video with me. So guys, you're going to go from someone who knows nothing in the forex market to someone who can actually sit down and look at the market and trade it for a living, as if you put in the work. So in this video, I'll be showing you guys some strategies as well that you can use to trade in this video guys. So stay tuned because you're going to be learning a whole lot. So you go from knowing nothing in the forex market to knowing basically almost everything you need to know that is important to know in the forex market, and I'll give you some strategies that you can use that can actually change the way you trade as a beginner trader, and some few psychological and mindset tips that you can use that's going to put you in the right state and frame of mind as a forex trader. So let's get into this. So let's get straight into this video. So first of all, we have to ask ourselves, what is forex? Because if you don't know what forex is and you want to trade it, then does that make any sense to start a business without knowing what the business is? So we need to ask ourselves guys, what is forex? Forex, also known as the foreign exchange or FX, is the market in which a nation currency is traded for that of another at a mutually agreed price or rate. Alright, and the forex market is run electronically within a network of banks 24 hours a day, 5 days a week. The forex market is actually the biggest market in the entire world. So guys, $3 trillion is actually traded every single day. That is a lot of money traded every single day compared to stocks, which is around $500 billion. So guys, how do you make money in the forex market guys? One simple way to explain it is buying when the market is low and selling when the market is high. This simply means that you create a product with a low price and you sell it on a high price. So guys, one good thing about forex, which makes it the best market in the entire world, is you can actually sell and make money. You can buy and make money guys. So whichever way you decide to invest and trade, you still get to make money. Alright, so if you're, let's say the market is at this point and okay, let me use this example. Or no, so let's say the market is at this point and for some reason you decided to buy and the market went up all this way, then you've just made yourself a serious amount of cash. You just secured the bag. And let's say the market is at this point again and you decide to sell all the way down here and you banked on all this moves. Guys, you just made yourself a bag. You just made some money guys. So it's one of the most lucrative market because you can do it anywhere in the entire world. You can be under a bridge with your laptop and a smartphone. Like, it's not, you don't even need a laptop, but I prefer a laptop because you get to analyze the chart even better with a laptop. I made a video showing you guys how to use TradingView. If you want to check that out, it's going to be in the description so you guys can understand how to use the TradingView to analyze the market. So you can be anywhere in the entire world and you can trade as long as you know how to trade, as long as you have a data connection, as long as your mindset is intact. So that's one thing that makes forex market one of the most lucrative business, because you don't need to go out to a workplace and trade. You can stay anywhere in the world and trade. So guys, one big thing that makes forex trading very lucrative, it makes it really amazing, is that you can start with a little amount of money. Like most businesses requires you to start with maybe $30,000, $25,000. Like in stock, I had that the minimum amount you can use to trade is something called the pattern day trading. You have to have an account size of $25,000. And in forex, I've seen people open an account with as little as $10. I've seen people open an account with 100. I've seen people open an account with 500. Start with $300, $200, and so the forex market actually makes barrier for entry really low because of their low entry fees, like their low entry capital size. So it's much more easier to start in the forex market. Like I started in the forex market before I even got close to stuff because I didn't have $5,000 minimum to start my account. I had like a few $100, so I did what any logical person would do, which is starting with forex. So guys, like I said at the beginning of this video, guys, that forex market, you can be anywhere in the entire world and you can trade. That is what I call minimum time commitment. So guys, you get to spend time. You can even trade from the comfort of your home because you can hang out with your family and trade. Like sometimes I go out having fun and I see a trading opportunity and I take the trade. I win or I lose. It's up to probability, guys. So it has minimum time commitment. You can be anywhere in the world. You can be hanging out with your family, your friends, your mom, your dad, your wife, your husband, and basically anyone. And you can like anywhere. You can be anywhere and still trade as long as you are with your mobile phone. As long as you can just place the trade. I don't care if it's with your mobile phone, with your tablet, with your PC or your laptop or whatever you're using. As long as you can tap that buy or sell button. Alright. So guys, in forex you don't have to worry about employees and office space and inventories, guys, because you're not selling anything. You're only trading digitally, guys, because all you do is place the trade. Like you can see buy and you can see sell and buy. Alright, so you just come in, you buy and sell digitally, guys. It's like, so you don't have any physical products, you don't have anything to do, you don't have any signing or anything or any shipping and delivery. You just come here, you buy, you sell, you buy, you sell, and that's it. And you make money from the comfort of your living room, spending time with your family and friends and doing the things that you even love to do. So guys, you can even be working a full-time job and still be trading in the forex market because it really doesn't obstruct anything, because all you have to do is place a trade, buy and sell when you see your setup. Alright, so guys, one thing again is that the forex market is actually recession proof. Alright, so if the economy is bad, like going down, if you know how to catch that opportunity, you can actually make a boatload of money. Alright, if the market is actually popping and going up, you can actually make a lot of money at the same time. So it's recession proof, because one thing that affects most physical businesses is the fact that when the economy is going down like this, they tend to panic, because whenever there's a recession it affects every businesses. But in forex it doesn't affect, because all you have to do, if you decide to trade when the market is having a bad time, like in recession times, well, if you decide not to trade, then you will make money. But if you decide to trade and you know how to trade and you know where the market is moving and you actually correct, then you're gonna make some serious bag. All right, as you know, for every success comes pain. There's no one that succeeded without having pain involved. Like no pain, no glory, guys. No pain, no pay. All right, guys. It's like asking yourself, is creating a business easy? Or is creating like like I see some people trading doing drop shipping. You guys know how difficult drop shipping is. Alright, so why do you think trading is gonna be easier? Like I said, guys, there's $3 trillion traded every single day in the forex market. That is nothing compared to drop shipping, and yet people think trading forex is gonna be easier than drop shipping. It's like saying, is building muscle easy? Is getting a six-pack ab easy? Definitely it's not easy, because you have to lift a lot of weights, which will lead to you having six-pack abs and getting ripped. Alright, so the same thing with forex trading. You have to put in the work, put in the hard work, master your skills, get professional, guys. Get professional, create a trading plan and take it seriously, guys, because I see a lot of people not taking this skill seriously and they think they're gonna trade for 1 hour a day and make enough money. But I'm just trying to tell you guys that you will not make enough money. So guys, you need to put in the work. That is very important. None of these things I'm saying now is gonna matter if you do not put in the work. Alright, There's a reason why 90% of traders lose money in the forex market. That's because they think it's going to be easy. They think trading is going to be easy breezy, and they forget that this is a $1 trillion market. This is the biggest market in the entire world. So why treat it like it's going to be some piece of cake? So guys, one thing I want you guys to understand that forex is like any other profession, guys. It's like being a doctor. It's like going to school to study medicine. It's like going to school to study law, going to school to study accounting. It takes time. Like you can't just go to school and spend a week or a month or 3 months and say you're now a doctor, you're now a lawyer, you're now an accountant, you're now an engineer. That doesn't happen. You have to spend 4 or 5 years in school to actually say, and not even spend time. You have to get certificate, guys. You have to even get first class. You can see how brutal that is. You have to have first class and have good grades to actually say, yeah, I'm now a professional doctor. So some people come into the forex market and think they can just spend 1 month, 3 months, 1 year and become profitable. That doesn't happen. Alright. If forex trading was a school, then was part of schools, then you have to have a certificate that shows that you can trade. So you have to trading like you're actually going to school, and the money you invest in it, treat it like it's going to be like a tuition fee that you're probably going to pay in school. So treat it like something serious. So guys, my next tip for you guys is try to make a realistic profit target. So I see a lot of newbie traders or even professional traders coming into the market and they say like they trying to make 500%, 1000% every single month. And I'm gonna be real, guys, that is really not realistic, because if you're actually gonna make that much money, it actually means you're risking too much money. So risking too much money, and if you ever if you ever encounter losing streaks, then the chances of you blowing your entire account is pretty high. Like I've seen traders trade with 10%, 5% of the account size, including myself. I'm gonna be really honest and brutal. So I've seen I traded like this at the beginning when I started trading, because I wanted to get rich quick, and I end up losing a lot of money that if I had traded with 2%, 1% of my account size, I could have made a lot of money, because the losing streaks wouldn't have taken me out when I blew my account. So can you do it consistently? That is the question you should be asking yourself. Like, can I consistently make 500% every single month? Is this trading a loss or is it a win? Because if you're trading with too much money, it means you're actually risking a lot of money. So at least 5 to 20% is a great profit target for you to get every single month while you trade from the comfort of your living room. So guys, for our next tip is the Forex basics. Alright, so guys, Forex is actually quoted in currency pairs. Unlike stock, which is example like Amazon stock, and maybe it's around $800 or $1,000. I don't know how much. I'm just saying. I don't know actually how much it is right now. But with stocks, you just go check how much is the price of Amazon stock. You can just go and ask how much is US dollars. You have to pair it up with something else. You see, US dollars against Japanese yen, or US dollars against euro, or US dollars against Indian rupees, for example, guys. So you need to be specific on what pair you want to know the price of. Unlike Amazon stock, which is you just know the price of Amazon stock, $800, and the price of US dollars against Japanese yen could be different, can be different from the price of US dollars against Swiss franc. So guys, in the forex market, each currency pair is actually given 3 codes, like 3-letter codes. Example, like the US dollars is quoted USD. So as you can see, the euro is called EUR. The US dollars, like I said, is called USD. The British pound is called GBP. The Japanese yen is quoted JPY. Swiss franc is quoted CHF, and Australian dollar is quoted AUD. Canadian dollar is actually quoted CAD, and New Zealand dollar is quoted NZD. Other currency symbols that are actually traded. So I want to, like, there's actually a lot more, but I'm gonna mention the other currency symbols that most traders might actually trade. So it's currencies like the Swedish krona, which is SEK, the Danish krone, which is DKK, and guys, the names of this is actually freaking me out. And the Singapore dollar, SGK, the Norwegian krone, NOK. Wow, never had that before. So, and the South African rand, ZAR. So guys, one similar qualities about most successful traders is that they tend to trade the most popular pairs, like the most popular and well-known pairs, and currency, like the most popular currency pairs in the forex market, and which are these 7 pairs, because they actually because if it's being traded by a lot of people, it means it's going to have a lot more liquidity. Like there's going to be a lot of movement happening in the market, which means the more movement the more the market moves, the more money they make. So these are the 7 pairs. So these are the 7 pairs these highly successful traders like to actually trade. And number 1 is called the EUR USD. So number 1 is quoted EUR USD, number 2 GBP USD, number 3 USD JPY, number 4 USD CHF, number 5 AUD USD, number 6 NZD USD, and number 7 USD CAD. Because these pairs actually have more movements, it's more liquid, the spread is actually not that big. So guys, that's just it for this section. So guys, let's go for the next section, guys, and that is currency exchange rates. So every currency is quoted in pairs, like I said, and mostly in 4 decimal places. Like for example, you can see GBP CHF. This means that GBP is the base currency and USD is the quote currency. And if you look over at this point, let's see where the current price is. The price for GBP CHF, the value now is at 1.21481. Guys, there's something I want to say is that you only pay attention to the first 4 decimal numbers, which is this 218214848. So this is the number you pay the most attention to, this 2148. This one at this point is a pip. Like I said, most currency has 4 decimal place, kind of like 4 decimal numbers after the main number, like this one. So one thing is you have to look at the 4th one. The 4th one is a pip. This one is kind of like a fraction of a pip. A pip is the smallest change in the currency pair that you are actually trading on. Right? This 4th number is a change in the currency pair. So guys, a quick example is if the if the GBP CHF goes up by, let's say for example 1 pip, it becomes 1.2149. It's no longer 48. Alright, it goes up by a pip. And if it goes up by, let's say 10 pip, it becomes 1.2158. You can even see an example here, like where if GBP CHF should fall down to this level, you can see it's gonna be 1.21400. So probably, and it's a minus 8 pip on this move. If this move should just come down to this point, it's gonna be like a minus 8 pip. So guys, like I said, most pairs has a 4 decimal place. There is one currency that has, that currency is the JPY, which is the Japanese yen. The Japanese yen are always quoted to 2 decimal place. So if the usual pair is at 0.001, oh sorry, 0.0001, which is the 4th decimal place, Japanese yens are usually quoted in 2 decimal place, which is 0.001. So guys, like I said, the US, let's say for example guys, the US dollar against the Japanese yen is 105.23, and like I said, this 0 up here, this 0 is a fractional pip, like half a pip, a fractional pip, I just don't know what it's a fractional pip guys. So the USD is the base currency, while the JPY is the quote currency. Just like the GBP CHF, the GBP is the base currency and the CHF is the quote currency. So if this USD JPY should change from 105.23 to 105.24, it means the USD against the Japanese yen, which is USD JPY, just gained 1 pip, because it's the 2nd decimal number that is a pip. This other one is a fractional pip. So I hope you guys understand. So what this is trying to say in short is that the USD against the Japanese yen is valued at 105.23. So it means that if you're buying USD against the Japanese yen, you're actually paying 105.23, and if you're selling USD against Japanese yen, you're actually getting 105.23 at this point. So guys, for the next section is going to be contract lot sizes. So guys, in the forex market, when you buy or sell, you're actually buying in lots. So for your USD, when you buy one standard lot, you're actually buying 100,000 units. So one standard lot means that you're actually buying 100,000 units of the base currency, which is this British pounds. So if you're buying, if you're trading on whether you buy or sell on this GBP CHF, which is British pound Swiss franc, it means that, as an example, you're buying a standard lot, one standard lot. It means you're buying the base currency, which is pounds, 100,000 units. So guys, you don't need to buy a standard lot, as there I think that there are four types of contract lot size you can actually take, which is the standard lot, like I said, 100,000 units of the base currency, and then the mini lot, which is 10,000 units of the base currency, a micro lot, which is 1,000 units of the base currency, and a nano lot, which is the smallest, which is 100 units of the base currency. If you're using brokers that uses MT4, then one standard lot is equals to 100,000 units. But if you're using brokers like interactive brokers, then you have to use the 100,000 units. Alright, so in MT4 you can just use one lot and place a trade, but with interactive brokers you have to use the 100,000 units. So if you put in one in an interactive broker, then you're basically just buying one, not 100,000 units. But with brokers that integrate with MT4, you put in one, you're buying 100,000 units. So you have to be sure of which broker, which service provider you're using. If it's MT4, then you can use one as a standard lot. But if it's an interactive broker, then you have to put in the units, which is the 100,000 units. So guys, for the next section is profit by going long. So guys, let's say for example you took a trade at this point. Let's say, okay, let's break and retest. You can see here. Okay, so let's say you took a trade. So guys, don't worry about the break and retest I just talked about. Now I will provide you information at the end of this video how to trade break and retest. So let's say you took a trade here for a long. So what that clearly states, or what that clearly means, is that you're actually trading that the British pounds will appreciate against the Swiss franc, So you're basically saying that the pounds will go up against the Swiss franc. If you're trading for a sell, it clearly means that the Swiss franc, which is CHF, is appreciating against the British pounds, or the British pounds is depreciating against the Swiss franc. So let's say you took the trade at 1.205858. So like I said, the pound Swiss is a 4 decimal place currency pair. So guys, you're looking at the fourth number, which is the 2058. So let's say we took the trade here and it moved all the way up to this point. So guys, one good thing about trading view is that you can even see the amount of pips the market just moved, and you can see it moved 33 pips. So this is a 4 quote pair, like a 4 decimal quote pair. Like I said guys, the 1, 2, 3, 4 is the most important number. This 7 right here is a fraction of a pip. So that's one beautiful thing about trading view, is it makes it work really easy. And like I said, I made a video on how to use the trading view app and website. So you can go check that video in the description. So you can see that it gained 33 pips. So you don't need to start counting and minusing and addition and subtraction. You just come to this point and you see, okay, 1, 2, 3, 4. You just made yourself 33 pips, and you won a 2.1 risk to reward ratio. So, and look at this, you're actually risking 15 pips. This 8 is a fraction of a pip, so it's not important. So the only place we're actually looking at is the 1 and 5, which means we are risking 15 pips to make 33 pips. I hope you guys understand this. So guys, for this next section, I'm going to be talking about leverage, the power of leverage. So guys, in Forex market, brokers allow traders to leverage up to 1:1,000. Like I've seen brokers borrowing traders up to 1:1,000. So this means that if you have a $1,000 US, if you have a 1,000 US account, you can be trading with a $1 million account. So if you were to make like $10 with your $1,000 account, you could be making $10,000 or even $1,000, because now the broker is multiplying the amount of money you have in the account by 1,000, giving you more buying power in Forex market. But the one I would recommend for a beginner trader is you should stick to 1:50 or 1:100 on the maximum. But I've seen most professional traders use 1:20. So it all depends on what leverage you want to use, and I'll be making a video very soon on breaking down what leverage is in depth. So I will leave a link to that video in the description. So guys, let's go to the next section. So there are 4 kinds of Forex traders, guys. There's scalpers, there is day traders, there is swing traders, and there are position traders. You know, I've had some channels on YouTube say if you don't trade the daily time frame, you're not doing the right thing. And I'm kind of wondering, like, would I tell someone that if you don't like ice cream, then you're doing the wrong thing? That you must like ice cream because I like ice cream, then you must like ice cream. That is bad. Like, everybody has their own, so everyone is entitled to their own opinions and how they like to trade. You know, some people like to trade scalping, which is a fast-paced market. I can't handle trading fast-paced, so I go for day trading. So I won't tell someone because I like day trading that you must be a day trader. Alright, so number 1 is scalpers, and scalpers usually target 5 to 10 pips per trade, and their trade duration is usually between like 1 minute and 5 minutes. So scalpers trade from the 1 minute to the 5 minute chart maximum, and their trades might last for some few minutes or some few seconds. That is scalping. So it's the fast-paced market, so you just scalp. Scalping, I mean, something like this. They scalp really fast. You know, the market move this much and they're making money. So that's a fast-paced trading strategy, which is scalping. And for number 2 is day trading, guys. So these are traders that usually target 20 to 40 pips per trade, and their trading is usually within a day. So if it exceeds a day, then it's no longer day trading, so it's kind of like swing trading. But if you're a day trader, then your trades, I usually take some trades that actually exceed a day, so I'm kind of a day trader and a swing trader. So what I'm trying to say is day trading usually lasts for a day or less, and most day traders usually trade 15 minutes, 1 hour, and 4 hour time frame. And I'm gonna say most day traders too actually trade on the 5 minutes, because I usually trade on the 5 minutes and my trade usually lasts for like maybe 15-30 minutes, even an hour, and I'm done for the day. I'm done trading for that section or for that particular position. So guys, number 3 is swing trading. These are traders that actually target 50 to 150 pips per trade. So their trading duration is usually within a week. So it's a week or less. So that trade don't exceed a week, even though it's now a position trade. So they usually trade on the 1 hour and on the 4 hour time frame. And for the next one is position traders. So these are traders that actually target 500 to 1,000 pips per trade, and the trade duration usually ranges from a month or less, and they usually trade on the daily and the weekly time frame. So that's all you need to understand about the types of traders. And guys, all this brief description I'm giving guys can be broken down into a whole videos. I can make a whole videos breaking down and explaining and showing you trades about scalping, day trading, swing trading, and position trading. But it's gonna take like, I don't know, 5 hours for me to end this video. So I will make separate videos on all these topics, and I'll put the links of all these topics in the description when I make those videos. So if you're watching this video, you can just go down in the description and look and check if I've made those videos, and so you can watch them and better understand them. And I hope you guys enjoyed this video, and I hope to see you guys in the next video. And if you want to see more videos like this, then click the subscribe button, share this video with your friends, like, comment, and support this family. And we're trying to grow really fast, and I know that we can grow to 1 million subscribers by the end of next year, and let's make that happen. All right, subscribe, like, follow me on Telegram. I actually give free signals and free trading ideas I meant to say. So guys, I hope you enjoyed this video, and I'll see you guys in the next video. Let's grow this iamXO gang. Let's be a family. All right, so guys, show some love, support, and I'll see you guys in the next video. I hope you guys stay blessed and